I think as we were looking at the whole Asian startup ecosystem, I think one of the biggest themes which we discussed amongst us was over the last 2 years how a lot of startups and digital companies have gravitated towards building more sustainable businesses. So this whole balance of growth and profitability has been pretty much on top of the mind. And that's what we thought we'll focus on in this panel. So I think we'll kickstart by, I think, the first question around that, which is that over the last few quarters, as individually, all of you have looked at this balance. What are the different levers you've employed? Because, I mean, there is a whole set of headlines which are around fixed cost and people and so on, but fundamentally, having worked with a lot of you as well, I know there's a lot more which goes underneath, be it in terms of GTM architecture or margin expansion or new products and so on. So maybe I'll kickstart with you, Prashant. I mean, just last few quarters, this whole balance. What are the learnings?
So I think there's a lot of stuff that when you are in a growth phase, you are very singularly focused on how are we going to get more market share, how are we going to get bigger. What that growth actually gives you is a lot of scale and potential efficiency while your organization, technology, management bandwidth is not focused on extracting that. Now, what you get at a phase when, in some ways, the capital markets get a little tighter is that the same technology and management resources then start focusing on getting those efficiencies of all the scale and everything that you got as you grew, start using that to build efficiency in every layer of the value chain. Now, where all does it start? I think when you grow at a speed you do, at the very top level, you acquire a lot of loss-making customers as well. You understand them that very easily and you shed that. That's, I think, the lowest hanging fruit. And then on the gross margin side, you realize your significance. You spend time, effort, energy on better negotiation, margin expansion. And at the below that is where the operational efficiency, whether on the variable cost and definitely on the fixed costs. Once you start intently looking at all of those elements and focusing your energy there and technology resources there, let's automate more, let's change processes, let's consolidate initiatives, departments, et cetera. All of that plays a role. And now we have seen it cycle after cycle, like these, at least the startup world, there are up, down. The tighter times, these are the best times when business is completely, and everyone is surprised how fast they turn around. So seen it happen repeatedly, and I think we are in one of those good phases that the companies that come out would actually be fundamentally strong companies, and their strong market share is already there, now strong economics, that's what we need.
Thanks. I think that's pretty much our observation as well. I think over all these cycles, as companies which come out, they build that lean muscle, if you will, right? Avinash, you were talking before this about how you have run a company which has been PAT profitable for quite some time. So just your perspective from a very different take. I mean, you're already profitable, things which you did and you continue doing versus something else which you're adding on.
Thank you, Shaleen. So as a profitable listed SaaS fintech company, we've been profitable for 4 years on a PAT level now. One of the things that's helped us, not just in these last few quarters, but from a fairly early stage, has been to look at profit pools and to enter into businesses where you see profit pools. And that may not be something which you may see today, but you should have profit pools that you're targeting and you see a path to profitability. I think every company has its own DNA and philosophy, so I'm not saying that everybody has to think this way, but I can share with you how we have approached building this business for the last 12 odd years, right? So path to profitability, profit pools, focus on those areas in the business which may not be that glamorous, but actually have sustainable profit pools. The other thing, of course, and I've said this in popular press fairly frequently, that we've always been frugal, nimble, and humble. And that philosophy or that approach has held us in good stead. It's not easy to maintain that when you got hyper-funded companies around you. But ultimately, you need to be true to who you are. I mean, if you are a Dravid, you are a Dravid. You don't try to play like a Sehwag, right? So know who you are and build according to that, and there's value for both.
Amit, your take. I mean, also you are in a segment where you entered. There are big incumbents there. You fought against them, created a huge niche. I think before this, he was sharing he's the third largest player globally in the wearable section, so it's commendable. I'm just trying to figure out, are the dynamics different from what Prashant, for example, talked about for you? Was if you're or is similar set of levers?
No, I think as we all share similar set of problems, and honestly, I agree with him what he said that you should play the game what you are good at. So when you are in a hyper growth environment, then you are chasing growth at any cost. And if you look at our example, we have been bootstrapped for the last 10 years. So we really worked on fundamentals. And when the market is tight, actually, so I mean, we are focusing on only 3 levers right now. So I think we are trying to fix our GTM first. GTM means, I'll tell you, we do wearables, watches and truly wireless. So we have close to 120 odd products in our range. But when we were growing very fast, doubling ourselves year on year, so everybody was saying, okay, I need to stuff the channel with this. I need to stuff every consumer. But now we are saying, yeah, it's okay. We can't be true to every consumer. Let's narrow down to consumers. Let's narrow down to channels. And let's narrow down to products. So from 120 to maybe 30 odd models, we are trimming ourselves down. So I think that is one lever which is helping us out because it is giving us more efficiencies in the system. Second, honestly, we are trying to work on our pricings also. I mean, trying to check the price elasticity. So that's one lever which is helping us out. And there are little levers which are long-term. I mean, when you look at operational efficiency, you definitely need it towards the entire life cycle. But people talk about gross margins also when we say that, can we reduce the cost of procurement? Like in our space, we are 70 to 75% cost of goods. But I think this plays really on long term. So it's very difficult to attribute short-term success on gross margin control. But I think GTM is the key lever which is helping us out to fight these turbulent times.
Very interesting. I think across very different kind of segments, but similar set of levers. I think sharper focus on profitable customer segments, products, looking at your margins and cost structure. I think the second question which we were discussing before this as well, right? One thing which we have noticed is, and Prashant, you alluded to this, we are used to these cycles, and these cycles have become more and more shorter and sharper. But there are always second order implications. I mean, as a founder, CEO, management board, you can, as set of people who are very much on top, you gear up to it. But as you make larger organizations, right, and people at the front may not necessarily be very close to why you're taking those calls, those shocks are much higher. So what I was curious about is, all of you run now fairly large organizations, right? How have you managed those second order complexities? Aligning people, ensuring that they are getting the right message, this whole DNA shift which happens quickly. Any learnings from things which have worked or have not worked? Maybe Prashant, I'll start with you again.
So I think realignment is kind of a critical part, and it's in the DNA of a startup ecosystem that there is realignment on multiple dimensions, but the fundamental direction and the fundamental strategic path should remain as consistent as possible. And I think at least for us, the most important part is that how does it become a part of the cultural DNA of the organization is totally dependent on how well your core team and the leaders of the organization are in actually understanding, appreciating, aligning, and believing that this is the right path for this time. So a lot of, I think, focus and energy is useful to put in to explain, over-communicate what is the plan for the quarter, what is the plan for the year, what is the change in direction based on what we are seeing as the new opportunity out there. People generally understand when they are openly and transparently explained why we are doing what we are doing. And if we can do it well at the leadership level, and that leadership is actively in touch with the teams that they operate, it becomes the culture of the organization. So, as I said, as long as we are not fundamentally taking U-turns and changing the direction, we are going where we are going. This quarter, we see an opportunity to double down on this line of business because of a certain change in the market. There is another opportunity that we see to focus on automation and efficiency right now because the competitive intensity is allowing us to do that. It needs to be just explained, and over a period of time, it doesn't seem like much of a problem, to be honest.
Interesting. Avinash, your take?
So similar to Prashant, I think one thing what Prashant mentioned, over-communicate, that's absolutely true. Communicate. And just today afternoon, I was chatting with a couple of my CXOs, and I was saying some of the communication that we have started to do post-listing in popular press and TV interviews and forums like this seems to communicate the impact of what we are trying to say much better than when you're standing in front of your team. So you need to figure out what forums to communicate on as well. How is your audience receiving it, both internal, external? See, an organization is a living being. And the markets are also dynamic. The environment is dynamic. So everything keeps changing, but it's required that you have a constant vision and consistent vision, and you stay true to that. If you're making fundamental pivots, then of course there is a lot of dissonance. The last thing that I'd add here is there'll be certain amount of realignment with some people who will not be able to cope, right? And as organizations evolve, grow, as markets evolve, that's not necessarily such a bad thing. They may find a better home elsewhere. So there will be certain amount of people who may be a good fit at a certain stage of a company's life, and some of them will grow with the company, and others may not be able to cope. So as long as you're empathetic, respectful, and you are supportive, I think people appreciate that even after they've chosen to move out.
Amit?
No, so I agree with both of what they are saying, and so there is one, I think, fundamental thing which both of them pointed out, that we need to be very clear on the vision what we are following. Now when we were very small, when we started up, we could change and pivot path every day. But now let's say in a business you have decided that you will chase growth or market share at any cost. After 2 months, you can't change that. So if you have a path you have chosen, and then when you clearly communicate to the team, I think fairly they understand it. So I mean, all businesses go through tough and bad times. The market doesn't go in one direction always. So what typically has helped us is having a very transparent communication with the entire teams. We often do town halls in the organization which help us to clear understanding. And second, I think what has helped us out is, making our leaders or CXOs be the change leader in the organization. So once you're leveled down, people are aligned with you. Once they are aligned on the same vision, then they will manage the rest. Often we have seen when people don't communicate transparently with the teams and not have a proper communication with the employees or any stakeholders, there is a problem which comes in.
Transparent communication. I think it takes much more guts, to be honest. I think I have seen, we all know of examples where that has not happened. So I think as a founder coming up and saying, look, this is the pivot we are making or shift we are making, easier said than done, right? I think.
No, but I was sorry, on a lighter note, I was reading a book, How to Be a Good Boss, actually, while traveling here. So it was said that you should do such things, and what you are afraid of doing, keep doing that more and more. You will have enough courage then.
Correct. So maybe I'll just add one more question around the stakeholders, right? And I think the other stakeholder which is important in our lives is the board, the investors, right? And there are two parts to that. There is a set of investors you have, and potentially if you're looking for a fundraise, again, there are a set of stakeholders you need to manage. Even in public market level, you need to manage. So was curious about when you look at that, again, all these upheavals. There is a pressure there, you have to manage the narrative. How have you guys done that? Again, set of learnings from there? Prashant, maybe from your side.
I think important to understand where they are coming from, important to understand what vantage point they are looking at the business from, and important to take that input and that feedback and process it objectively. I think often early stage founders, or even we during the initial phases, I would have say the same thing about myself. We over-index on what the investor wants as something that is either the gospel or that is the right thing, or in many cases disregard it while it is coming from a vantage point that we don't appreciate at that point. I think once you understand, they look at the world with from a different place. They are invested in you. They are looking to maximize value. Time horizons could be different. It's good to understand even that. And they are often sharing what they are seeing, but it's up to the entrepreneur to actually index properly whether they are not overly or underly putting weight on that. So I think that's where over a time maturity comes. Over time you start seeing it for what it is worth, and it is then extremely valuable to have that input. You take it as direction, and you then will feel it keeps changing every quarter, because the change in the ecosystem is so fast. One quarter it will be that we need to go all after market share. That's the only thing we have to go. B2B has become the next big thing. SaaS is something. What's your SaaS strategy? What's your AI strategy? It changes every quarter. That this is what the world is looking for. Today, every company might want to have AI. What exactly are you planning? And so, as an entrepreneur, if you keep reacting to everything that the ecosystem is seeing as the next exciting thing, it'll only confuse you and you won't be able to do justice to it anyway. So you need to take it for what it's worth. Good input that there are exciting things that I'm aware of. Let me then figure out what makes sense for my business and stay as consistent as you can to the plan that you've laid out.
Almost a Zen thing, huh? So Buddha's middle path. Avinash, your take. I mean, from a public market point of view, it's a different set of protagonists out there.
Oh yeah, public markets, you got a lot more stakeholders and investors of all hues. So it's a little more complex. Having said that, I think I agree with Prashant again. Managing your own emotions as how you process feedback, and having the wisdom to figure out what pieces of advice to take and what not to take right off the bat. All advice typically is most cases, but it may not be the right advice for you at that stage, right? So you need to be able to evaluate and understand that. Again, I think with stakeholders, the more you're able to explain what are your thinking, how do you see the organization evolve. The one caveat that I want to say with public markets is you need to be a little more calibrated in how you communicate, especially with external stakeholders, because you're now a listed company. There are a lot of SEBI guidelines and directives. So it is more something that you need to be cognizant of. And yet, there are companies that I know of who have just gone into a shell saying, I just want to be very careful about what I say, and I will speak as less as possible. I think speak as less as possible is not necessarily a great strategy unless you're a very large, well-known organization, right? You're a 100-year-old company, everybody knows you. You possibly don't need to speak a lot. But if you're relatively young, if you're relatively unknown, please go engage with your stakeholders, communicate with them, and respectfully accept what advice they're giving you. Keep it in the back pocket. Some of it you will implement right away. And most of it you will implement it over the course of the next few years, and maybe there will be some things that aren't applicable for your business. So how do you distill that is an art and a science.
Very interesting. Amit, your take?
Maybe not exactly the right one, because we just raised our first capital 2 months back, but what I believe that, see, you are the best at your business. So when investors comes in, they are looking at just the MIS, and then definitely they are knowledgeable. They look at different industries, different markets, different geographies, but you are the best at it. So take advice from everyone, but I think you should know what to pick and what not. And that's it. I recommend that.
No, very interesting. I think, and maybe I'll come to the last segue to this. I mean, if you look through the thread of all the conversation, one linchpin has been pretty much at the top, right? The founder, the CEO, and the pressure is incredible, right? And every cycle, you are the first nub where that needle goes in, right? So just very curious about your own personal journeys, right? And it's a longer conversation, maybe you have to have offline over a drink, but just as a summary, if you were to think about set of things as you have grown from an early stage to now a mature company, things where you have stretched, learned more about yourself. That's part one. Part two is, how do you continue that? I mean, do you have a sounding board, coach? How do you actually go about this?
I think on the second part first, it's very important to have a strong personal friends and family foundation that you can, at least some place where you can be yourself, chat, feel free, etc. So I think that is extremely important, because it just keeps you tethered and grounded and gives you that freedom. So for me, that has been extremely, extremely important. To the other part of the question, I think everyone has their own way of processing with or dealing with pressure or the circumstances in front of you. In my case, at least, I try to be as objective as possible about just classifying things as, are they controllable or are they not controllable? And if they are not controllable, then I should not waste my time, energy thinking about it, and move to what I can control. And what happens again with a lot of early stage founders, I think, is they obsess over things that they cannot control. Some competition raised in so much capital, that investor who was speaking with them decided they don't want to proceed with the deal. It's happened. Now, what you can't reverse what has happened or what the world is going to do, or you can only focus on what you can focus on. And if you can push yourself to be as objective as possible, that, okay, this goes in a bucket that not in my operating domain, can't do much about it, so let it be. And then spend all your energy on the 2-3 things you can control. And I think that also at the end of the day, it's your own innate DNA and personality also. You can get very volatile experiences as a startup founder, real high, real low, this, that. It starts like this, but over a period of time, you start getting more and more even and stable about dealing with these things on both sides. And I think it's healthier to reach that kind of a little bit of an equilibrium from a personal balance perspective. Investing in your health, wellness, fitness is extremely, extremely important. And I think it's not that time away from work, it is an investment to make the time at work way more beneficial. So that is one thing I would recommend to everyone as well.
That's important. I think I've seen founders struggling with the guilt of actually investing in themselves, right? I think which doesn't work. Avinash, your take.
Yeah. So, Prashant, agree with everything that you said, every word. Just to add to what was said, one is self-awareness. Self-awareness is, I think, the most critical thing. Be aware of what you're good at, what you're not good at, what you believe you can learn, what you believe you should delegate, or bring in another co-founder or somebody else, because that's, I think, so many cases we tend to believe that we are, or we psych ourselves up to believe that we are superhumans, right? We aren't, and we can't be, and we should not attempt that. The other thing is adaptability, because the company itself is a new company every year, right? And I'm saying this after 12 years as, at the helm in Zaggle. And you need to adapt to that, both the external environment changing and the company evolving. And maybe there are areas after a certain maturity of the organization that you say, hey, I enjoy more doing A, B, C. And it could be anything for you. And you do more of that, and you find somebody else in the organization or bring in somebody else to be able to do the other things. I think because when you start doing more of what you are good at and what you enjoy, and typically there's a correlation between the two, your longevity increases and your value to the organization goes up very significantly. And lastly, I think, you know, your family, you should also look to have a sounding board of fellow entrepreneurs, fellow founders. There are communities like this of entrepreneurs, EO, YPO, Ascent, and those communities I have found over years, I've been associated with some of them, really valuable, because you have other entrepreneurs or founders who are giving you unbiased advice of how to deal with your, you know, problems or situations. And that's you know, really something that you cannot get within your company, and something that you cannot get from your family.
Amit, I mean, in Noise, you've seen multiple such pivots and scales, so your take.
No, I think most important, I personally believe, is self-care. I think we all go through, as founders, you know, we all have tough times. In the night when we sleep, tomorrow morning, we know what going to happen or what unexpected can come. But so I personally spend a lot of time on my personal care. That is super important. I spend close to 1.5 hours. That really helps me out to stay calm. Please understand, when we go to office, we need to be now rational. We need to be soft to people around. Second, I think family is important. You need to have a right balance, because if you believe that, then you are able to cultivate that in your teams also. See, we all spend 80% of our active hours at work actually. Rest we go back home and just go off to bed or something. So I believe that is important. And what he was saying is this communities of fellow co-founders where everybody is seen their set of journeys, face similar problems. Let's say where we are, he's already listed. We all are pivoting to that path. So what he has seen, what he could help us is really insightful. And second, I think more important is we cannot be reactive to people around in the organization. We can't be ad hoc. There are challenging times every day, but we need to handle these situations very calmly. And I think self-awareness is super key. We should know what as founders are your strengths and weaknesses. By the way, I know what are my strengths and weaknesses. So I have team who works with me, who just balances me out on that. And I think that's the super critical part to it. And where I also am facing a challenge is, as founders, we think we are superhumans, and we could do everything when we were very small. And we expect our teams to work at the same pace. Honestly speaking, that doesn't happen. So delegation is an art which I think is helping us out to grow. And second, I think as founders, our job is not just giving instructions, but making people part of the vision, what you do. And once they have a buy-in in the vision, they will help you out to do that.
No, thanks so much. I think we are on time, but thanks so much for sharing so much so candidly across, I think, various facets. So I think great conversation. Thank you.
Thanks for having us here.